And Bruce Porter is joining us now for this week's Dollars and Cents segment, sponsored by the Resource Center. Thanks for coming in, Bruce.
Good to be here.
Today's topic is life insurance.
Yes, this is Life Insurance Awareness Month.
Is it?
So I thought, it's a good thing for us to dive into. There's some pros and cons that I think we have to consider. So we're just going to kind of get right to it.
Good.
Yeah.
Sounds good.
So life insurance, the main thing about life insurance is making sure that you establish a purpose for what that life insurance is going to be needed for. Now, you might be, I think I cover it on the next screen, you might be needing it for debt reduction, right?
Okay.
So if you have a lot of debt, you're a young family, it's probably, it's a good idea to have some life insurance just in case something was to happen to mom or dad. You could, maybe pay the mortgage off, cover any debts that are outstanding, things like that.
Does most debt transfer to other generations?
Yes, it can. And so, what you want to do is not leave your surviving spouse, straddled with a mortgage, student loans, anything that's going to cause a financial heartache. Income replacement, that's another good purpose for life insurance. There is a value that we can establish for a stay-at-home mom. There's also a value for dad, the traditional family. And so when you're looking at what if something was to happen to your mom, right? The woman of the house usually picks up those child rearing and, raising the family, things like that. If something was to happen to mom and you have young children, the dad, he can't quit his job.
Yeah.
You got to have income. So he's going to have this thing called daycare.
Oh,
Yeah.
absolutely.
Friends and family would help, but it's not their job to raise our children.
Yeah, every single
So
day.
providing life insurance to replace income, provide for necessary needs of a young family, that would be, a way to establish what's the purpose of buying life insurance. Now, life insurance has become more affordable than most people think. You can go online and shop all day long for life insurance. And there's some things we're going to talk about, but work plans are great, except if you terminate or leave that employer, you may or may not be able to take that with you. So it might be what they call portable. It may not be. So if it's not portable, that means you can't take it. Then you'd have to replace it if you had a need of life insurance. 3 basic kinds of life insurance: whole life, universal, and term life. And there's a variety of differences and different types of whole life, universal, and term.
Can you give us an example of what the differences are there?
Okay, whole life, it's usually the most expensive. It's permanent. You pay a premium for your lifetime. It builds up cash value and dividends. And then, eventually there's enough dividends it'll pay for itself. But it's usually the most expensive kind of life insurance. Typically what we see, people buy a lower face amount because it's more of an affordability option.
Right.
They treat it as an investment. Universal life, kind of similar to whole life, it's more flexible. You could pay a premium for a certain amount of time and then either soften that, lower the premium, or raise it, or stop it and not sacrifice your coverage, and it'll carry itself for a period of time. And then term insurance is just like we get on the internet. You buy a large amount for a small amount of money. You know, at your age, you could probably buy $1 million for 25 or $30 a month. I couldn't, but you could.
Now, speaking of age, I'm curious. So I feel like when we think of life insurance, we think like later on in life, but what's like the appropriate age to start looking at plans and get involved with that?
If you have debt or if you have a family.
Okay.
I mean, that's just the bottom line. If I was a single person with no children, no wife, I wouldn't want to leave my parents maybe strapped with my mortgage payment or my debt on my vehicle, things like that. I might want to provide them with some benefits so that I can basically take care of my own obligations. And then they would be the recipient of that.
Okay.
Now, establishing the need, you buy what you need, don't buy more. The average age of a life insurance policy, it's about 7.5 years. People buy it, they overspend, so you got to be careful about spending too much money on your premium.
Right.
So you buy what you need, but if you spend too much, on average, 7.5, 8 years later, you're going to cancel it. So you kind of wasted your money. Now, again, you got to establish a purpose. One of the cautions that I would give folks, there's a lot of TV advertising directed towards the elderly, buying life insurance, and we've all seen the ads, right? What they do, they peddle units. And so I would caution you on buying units. So if a unit is $1,000 and it's $10 a month, that's fairly expensive life insurance.
Yeah.
And so you would need several units to accomplish what you want.
But that's why you're here, is to help us out. You're the expert.
That's
so
right.
come to Bruce with any questions. You can visit his website, resourcecenterinc.com, or give him a call at 417-882-1800.
Thanks, Bruce.
Good to see you.
Thank you. All right, coming up, learn about the upcoming PBR Thunder Days.
More on that when we return.